Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ocular Therapeutix, Inc. annual report. Ocular Therapeutix, Inc. offers a range of businesses and services that cater to eye health needs. The company's primary focus is on developing and commercializing therapies for retinal diseases and other eye conditions using its bioresorbable hydrogel-based formulation technology. The company markets DXD-NZA, a dexamethasone ophthalmic insert, which treats post-surgical ocular inflammation and pain following ophthalmic surgery, as well as allergic conjunctivitis. Additionally, Ocular Therapeutix is developing several other products, including AXBAXLI, an axitinib intravitreal hydrogel for the treatment of wet age-related macular degeneration and non-proliferative diabetic retinopathy. The company's pipeline also includes OTXDIC, a travoprost intracameral hydrogel that has completed Phase 2 clinical trials for the treatment of open-angle glaucoma or ocular hypertension. Furthermore, Ocular Therapeutix has a license agreement with AFAMed Therapeutics, limited to develop and commercialize DXD-NZA and OTXDIC. Overall, Ocular Therapeutix provides various businesses and services related to eye health, including product development, marketing, and commercialization of therapies for retinal diseases and other eye conditions. Unfortunately, I do not have access to the text you provided. However, I can provide a general essay on what could cause an increase in stock price for Ocular Therapeutix, Inc. Ocular Therapeutix, Inc. is a biopharmaceutical company that has seen its stock price increase significantly over the past year. Several factors may be contributing to this trend. One possible reason is the company's progress in developing new treatments for eye diseases. With several pipeline products in various stages of clinical trials, investors are likely optimistic about the potential for future revenue growth. Another factor could be the company's recent announcements regarding partnerships and collaborations with other industry leaders. These partnerships can provide access to new markets, technologies, and expertise, which can enhance the company's competitive position and increase its stock price. Additionally, changes in regulatory policies or market trends may also be contributing to the increase in Ocular Therapeutix stock price. For instance, if there is a growing demand for treatments related to eye diseases, investors may be more likely to invest in companies like Ocular Therapeutix that are working on developing new therapies. It's worth noting that these are just speculative possibilities, and without access to the actual news source, it's difficult to pinpoint the exact reasons behind the increase in stock price. Ocular Therapeutix, Inc. maintains a market capitalization of $2 billion, broadly in line with the industry peer group. Ocular Therapeutix, Inc. trades at a higher price-to-book ratio of 2.98 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 31% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. Net income for the company experienced a decline in both 2025 and 2024. In 2025, net income dropped to -$265.9 million, a significant increase from the previous year's loss of $-193.5 million. This downturn can be attributed to various factors such as clinical trial failures, regulatory issues, and high operating costs. Profit margins also saw a decline in both 2025 and 2026 compared to the previous years. The decrease in profit margins may be due to several reasons, including reliance on third-party suppliers or manufacturers, decreased product sales from DEXT and ZA and potential future products, as well as increased debt service obligations. These factors collectively contributed to the downward trend in net income and profit margins for the company. The company's financial performance indicates that it is generating positive operating cash flow over the past 3 years. Although the company reported net losses in each year, the actual cash used in operating activities was significantly lower than the net loss. This discrepancy suggests that the company is managing its expenses effectively and generating sufficient cash to cover its operational costs. In 2025, despite a net loss of $265.9 million, the company only used -$204.9 million in operating activities, indicating a positive operating cash flow of $61 million. Similarly, in 2024, the company's net loss was $193.5 million, but it only used -$134.7 million in operating activities, resulting in a positive operating cash flow of $58.8 million. In 2023, the company reported a net loss of $70.2 million and also used -$70.2 million in operating activities, which is essentially break-even. However, this still indicates that the company was able to cover its operational costs without generating any excess cash. Overall, these results demonstrate that the company has been successful in managing its finances and generating positive operating cash flow over the past 3 years. The company's debt level has remained relatively stable over the past year. As of December 31, 2025, the outstanding principal indebtedness stood at $82.5 million, which is consistent with the previous year. This suggests that the company has not taken on significant new debt or paid down existing obligations. In terms of interest expenses, there was a notable decrease from $13.6 million in 2024 to $11.8 million in 2025, representing a reduction of $1.7 million. However, it's worth noting that non-cash interest expense remained relatively consistent between the 2 years, at $3.4 million and $3.7 million respectively. Overall, while there was no significant change in debt level, the company did experience a decrease in interest expenses over the past year. The recent market analysis has revealed a mixed performance across various segments and regions. On the negative side, international markets have struggled, indicating a decline in sales and revenue. This underperformance is a concern for companies looking to expand their global reach. On the other hand, some segments have shown impressive growth. The United States market has been a standout performer, with strong sales and revenue growth. Additionally, specialty distributors have also seen significant success, suggesting that these niche players are well-positioned to capitalize on emerging trends and consumer preferences. The management at Ocular Therapeutix, Inc. does not provide a clear statement on the company's outlook or strategy in the given financial reports and documents. The text focuses primarily on providing summaries of the company's financial performance, stock compensation plans, and valuation assumptions. As a result, there is no explicit information available regarding the company's future goals, objectives, or direction. The company's dividend policy has been consistent over time. According to the extracted summaries, the company has not paid cash dividends in the past and does not anticipate paying any in the foreseeable future. This suggests that the company is prioritizing other uses of its funds, such as investing in growth initiatives or repurchasing shares. However, it appears that the company may have the ability to buy back shares in the future. While they have never declared or paid cash dividends, this does not necessarily mean that they are unable to return value to shareholders through share repurchases. In fact, the summaries imply that the company has the flexibility to consider various options for returning capital to its investors. In summary, while the company has not paid dividends in the past, it is possible that they may choose to buy back shares in the future as a way of returning value to their shareholders. Concerns about inventory buildup or supply chain disruption have been raised in various aspects of our operations. One concern is the potential for insufficient supply of certain products, such as AXB-AXLI, which may not meet clinical trial requirements or commercial sales demands. A reliance on a small number of specialty distributors also poses risks, including loss of sales from these customers. Furthermore, our just-in-time manufacturing practices and limited commercial product inventory may lead to reduced product sales if we are unable to meet demand. Additionally, single-source suppliers may struggle to keep up with demand, and changes in tariffs and trade restrictions could disrupt the global supply chain. These disruptions may delay product development, testing, and clinical trials, leading to increased costs and expenses. The potential for inventory buildup or supply chain disruption is a significant concern that requires careful management. Establishing replacement suppliers and mitigating risks associated with single-source suppliers are essential steps in ensuring a stable supply chain. That concludes the financial summary for Ocular Therapeutix, Inc. Feel free to comment below, and I will be happy to answer them when possible.